Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Tuesday, the 16th of February. Starting off with Asia Met Resources, and got a decent break of the 50-day moving average at 1.17 pence. Ideally, there's now no end-of-day close back below this feature ahead of a new leg to the upside. Initial target, obviously, the old September resistance of 1.9 pence over the next 2 to 4 weeks. And after that, 2-3 month target as high as 2.1 pence at the top of this rising 2015 price channel. Only back below, let's say, 1.05 pence, which is the floor of this rising August trend channel, would really delay the upside scenario. Next up, a stock which is new to the bulletin board heroes, and that's Keras Resources. Here we've got a break above the 200-day moving average at 0.49 pence, at support of that yesterday, or just above that yesterday, in fact, and this is looking encouraging as a turnaround situation. Obviously above the 200-day line, looking for a 0.8 pence, which was the post-2015 resistance zone. Might be able to scrape a bit more out of the stock in the sense that looks as though we're in a rising trend channel with its resistance line projection heading to 1.1 pence. And that's valid at least while there's no breakback below 0.4 pence, which is the 2016 resistance to date. MX Oil is a stock which I shudder to look at, but looks as though it's still in a sort of recovery mode after the slap we took to start the year. I like the unfilled gap to the upside that remains in place from last month. The support point above that, the top of that gap at the 0.85 pence level. So while there's no end of day close back below a penny, we're looking for further upside or further recovery here. Initial target 2 pence, which is February resistance, and the best case scenario target over the next 2-3 months as high as 3 pence at the top of this October rising trend channel. Be cautious on the shares. You wait for an end of day close above the 50-day average at 1.64 pence. But it looks as though there's enough recovery signs here with this unfilled gap to not be that cautious in terms of waiting for a momentum trigger. Sea Energy is next, and here we can see that we've got what looks as though it's a tentative recovery situation. Support line can be drawn from October, just bounced off that there, and as far as the target is concerned, it looks like we're in a sort of megaphone formation heading for 10 pence. If you're cautious on the stock, which you probably would be at this stage, you'd wait for an end of day close above the 50-day moving average at 3.86 pence before going long. But it just looks as though the shares have finally made a little base here, especially as there's a bit of RSI divergence in the oscillator window with an uptrend line from November. Moving on to an old favorite, UK oil and gas. Hasn't quite behaved as a favorite, but it's still an old favorite anyway. Here we've got a rising trend channel from the autumn of last year. Support 1.2 pence, rather obvious. Break above the 50-day moving average, 1.29 pence, is helpful. We might want to see an end of day close above 1.5 pence, which is February resistance, just to make sure that the shares are finally on their way to a 2 pence target at the top of this price channel. But aggressive traders and fans of the stock will be going long on the basis of the big, well, quite a sharp key reversal to the upside for Monday's session, and the RSI rebound off the 50 level as well to take it to 56. So it looks as though there's a bit of action there. Stop loss back below 1.2 pence. Finishing off with Zoo Digital, and here you can see that we've got this mid-move consolidation breakout. Just looking for an end-of-day close above 11 pence, really, to confirm the breakout, but a decent bounce off the 50-day moving average at 8.6 pence. And while we hold above the 50-day line, best case scenario target over the next couple of months is as high as 15 pence at the top of this rising 1-year trend channel. That's it from me. More updates at the same time tomorrow.